Hello, and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I am here to bring you your weekly news. So we had a special a couple days ago. There was no episode last Friday, so we have a lot of catching up to do. So I'm going to pop into these slides and get moving because there is a lot to share today. So today's August 6th, 2021. And as I just mentioned, I did have a special edition of your South King County Real Estate Update. It aired a couple days ago, but you can find it on YouTube, Facebook, Instagram, on my website. You can find it right there. It's just linked on my YouTube. So make sure to check that out and let me know if you have any questions. So what happened this week? Ooh, my stop sharing over here. All right. So this week, there was a lot that happened this week. So today, we actually just got a couple hours ago, got the clear to close less than 2 hours ago on my Tacoma purchase deal that I've been working on. That was a kind of a challenging deal. It had a lot of communication, different people communicating in that transaction, and we ended up having to do a number of extensions just so that we had time to take care of all the appraisal items and all the things that we needed to get the loan funded. So I am happy to report that we are at closing day, and I can't wait to go deliver keys to my awesome client. It was definitely a challenge to get there. There was a lot of items called out on the appraisal. So when somebody gets a loan, the lender sends a third party out, an appraisal company, to go and look at the house and make sure that it is worth what the buyer is willing to pay for it. And this one, it came back at value. So yes, it was worth what my client was willing to pay, but there were some conditions like an electrical inspection, some foundation work, some tile work in the bathroom. There was some like the stick-on tiles there that weren't very well done. So we have all of those items taken care of now. Buyer and seller have both signed, and we're at the closing table. So that is super exciting. As far as what's happening in my transaction with my purchase for the rehab loan, I highly recommend you follow my channel, Facebook and Instagram, get updates on that as there's developments. So make sure to follow along and catch those little updates as we go along. I'll jump back into these slides. So this was from a couple weeks ago, but like I said, we're doing a little bit of catch up, so we've got to move fast today. There was another record-breaking spike in home prices. So in May, the Seattle area, greater Seattle area, was up 23.4% year over year. So home values have increased 23.4% since May of last year to May of 2021. But remember, the end of March, April and May, people were still kind of in that pandemic mindset last year, trying to figure out what was going on. There was just a lot of uncertainty about the future, and a lot of people don't make big decisions like purchasing a house when there's a lot of uncertainty. So keep in mind that these year-over-year jumps, while they are impressive numbers, we are kind of comparing it to our trough on home values because not a lot of things moved at the very beginning of the pandemic. That quickly changed, but right now our year-over-year numbers are comparing it to that trough period of the pandemic. Nationally, home prices rose 16.6% in May, and this is from Case-Shiller, which is like 2 months behind by the time they come out with their report. So keep that in mind. But Seattle was among the 5 cities that recorded their highest ever 12-month jump. So if we look at our home prices graph compared to the national levels, this goes back to 2016. We have had a 67.8% increase in home values in our area since 2016, which is well above the 41.3 national average. And while home prices are super low, or the number of homes for sale is super low, prices are high, and some buyers are kind of backing off because they've had a little bit of a hard time getting offers accepted. So people are taking a break, making sure they get that vacation in before school starts. So we have seen fewer applications for new mortgages over the past couple months as people have been taking a step back from their home search and spending time with their families, enjoying the summer, taking vacations since they haven't been able to for quite a while. Snohomish County was the highest jump at 24%, but I mean, overall, we're right around the 20% increase, and that is just a crazy number. So this one came out yesterday in Seattle Times. Seattle's housing market is cooling, but that doesn't mean it's affordable. And yeah, with we've seen a little bit of relief on, like, there was a lot of offers that were going 100K over list, which is just really crazy. So now we're seeing a lot less of that crazy dollar amount over list price on those offers. Now it's tamping down to like 50K or less in a lot of areas. It is very area specific, but there's been more homes coming on the market recently, and as I said, some buyers have stepped back. So that supply and demand shift has meant that things aren't getting escalated quite as high over list price. And maybe there's 1 or 2 offers on a house rather than 10 to 20, like there was a couple months ago. So this little map right here, the darker the red, the higher the price increase. So you can see this dark red here. This is 30% or greater increase in certain areas, but you can see how area specific it is, because there's some areas that are still in the pale of less than 10% increase. And those are generally clustered right around the Seattle area as people have wanted to move further out from the downtown area. And if you look at the 4-county breakdown here, all counties have gone up significantly in price. But you can see Snohomish, Kitsap, and Pierce have ticked down just ever so slightly at the tail here. There's just been a little bit of buyer pushback on the pricing. And if you look at condos compared to single-family homes, you can see that there is quite a disparity on what has happened with prices in Southwest King County here. From 2020 to 2021, home sales have gone down 11.1%, but on condo sales, it's gone up 59.3%. So you can see how area specific this is. Like each region is performing differently, and then each of the neighborhoods inside each of these regions, there's a lot of disparity on what's happening on demand for those. But overall, the housing market seems to be cooling down nationwide, with fewer people applying for home loans. And we're really seeing a bit of the comeback of the condo. At the beginning of the pandemic, people were like, I don't want to be anywhere near other people. So they were moving out of their condos into single-family houses. But once single-family houses the market for that got so intense, a lot of people kind of rethought their game plan and reconsidered the condo possibility. And you can see year-over-year price appreciation. This is broken up by price point. So there's low, low, medium, medium high, and high. And normally low and the low medium range would increase in price significantly more than percentage-wise than the high end. That's generally what we'd expect to see. However, as you can see here, the medium high and the high end have really, really shot up in 2021. And yeah, this is just really surprising to see so much demand and so many escalated offers at the high end. I wanted to bring attention to some headlines that may be coming out soon. There's a big shift in institutional investment buying. So these are individuals or businesses that own 10 homes or more. That's what they're considering institutional investment in this metric. So, I mean, generally, if you were talking about institutional investments, you'd be talking like 100 doors or more. But this is talking about 10 doors or more. And it's shot up a lot. The investors are wanting these homes. So it's the highest level since the fourth quarter of 2015 for investment purchases. And if you look at this, this is the percentage of single-family home purchases that were done by institutional investors. And you can see it's we were way below our average in 2020. This was a lot of the uncertainty to do with the pandemic. People didn't know if it was going to be a good investment. And it became clear by 2021 that investors do believe that homes are a good place to put their money. And generally, if you're watching what investors are doing, it's a good implication for what is going to happen with home prices and home values in the future. So investors right now are betting on the fact that home values are going to rise. And they actually, so rental homes, single-family rentals. I'm trying to go fast and just tripping over my words here. So single-family rentals have been a major subsection of the housing market. And they're basically about 1/3 of the rental homes. So now we are seeing a 12% increase of new single-family construction that is just being done for rentals. Like, we're seeing such an increase in people investing in rental properties that that alone, I feel like, that's one of the driving factors that's pushing up the home values and the offer prices right now is these investors that have money sitting around. They're like, well, that's a great investment, and that's where they're putting their money. So switching pages just a little bit, forbearance was set in place for homeowners that were having trouble paying their mortgage during the pandemic. But you can see we are down to 3.47% of mortgages in forbearance, and 40%, nearly 40% of homes in the United States don't have a mortgage. So they are all paid off. So of those that did have forbearance, 44% kept paying. They paid in full the whole time and just had this set in place as a safety net. Almost 39% worked out a repayment plan. 17%, yes, they're still kind of in trouble, but yeah, I don't want to downplay the struggles that these families are having, because it is terrible and it is a crisis for their family, but it is so much less. So many fewer people are being affected in this way than experts predicted. So this is a quote from the Vice President of Reality Track. While some borrowers will not be able to recover from the financial distress COVID inflicted upon them and will face the choice of either selling their home or losing it to foreclosure, there won't be enough of those properties to fix the supply-demand imbalance in the market. And they shouldn't need to be sold at so much of a discount that they'll impact prices in any given market. Concerns over foreclosure increases have been wildly overestimated. So if you look at, these are foreclosures over the last few years, and in 2017, there was almost 315,000 foreclosures. And right now, we are going to see nowhere near that as far as what's projected. Like the amount of people that are still in trouble here, we're still going to track at behind our average for foreclosures for the last few years. Which brings us to our market stat minute. We had 859 new listings in King County in the last 7 days, 1,106 pending, and 897 sold. So you can see we're kind of ticking down on all metrics here just a little bit. But as I said before, this is kind of due to people like taking a step back and heading on vacation, spending time with their family, and getting ready for the start of school. We did get our July recap stats from J. Lennox Scott, Chairman and CEO of John L. Scott. And you can see we have 0.5 months supply, which is up from earlier this year. However, that is still significantly below what we would consider a healthy market. A healthy market would be 3 to 6 months of inventory. And yeah, we are way below that. So this is a strong seller's market still. And there's an extreme frenzy in almost all price points. Showing activity, this follows the trend of what I've been talking about. There's a little bit less buyer activity walking around in the market because they're off on vacation, spending time with family. So it's just ticking down a little bit, but I do think we'll continue to see this trend for a little bit. However, I know that there have been a number of buyers that have mentioned the possibility of jumping back into the market in the fall. So last week, the average mortgage rate for the week was 2.8, and this week our weekly average is down to 2.77%. There's been a lot of concerns about the Delta variant in the pandemic, as well as some, basically we were waiting for this jobs report that came out today. So if we jump over to our more current mortgage rates, not our weekly average, we're at 2.9, which is up 0.05 from yesterday. And this is all due to the jobs report that came out. But yeah, so this is addressing the weekly average article saying we're at the lowest in several months. And the black line is the weekly survey. And you can see today we just jumped straight up, erasing a lot of the growth that we've had over the past couple weeks, or the decline that we had over the last couple weeks. But notably, these 3-week highs are still historically low. If you even going back to 2019, we are seeing things are way better than they were in 2019 and before that. So basically, the main source of drama was the strong jobs report from the Labor Department. The unemployment rate dropped from 5.9% to 5.4%, and experts were expecting about 5.7%. So this jobs report significantly outperformed what people were predicting. So therefore, as our economy gets better, mortgage rates are going to get higher. But yeah, basically the bottom line is the stronger data increases the risk for rates but uncertainty about COVID and its impact on the environment could push back in the other direction. So we have a positive jobs report and saying the economy is doing well, people are doing well, and then we have on the other side the Delta variant, which some people think is going to really negatively affect our economy, and interest rates generally follow the inverse of whatever the economy is doing. So if the economy is getting better, interest rates are getting worse. And if the economy is getting worse, interest rates are getting better. So yeah, here's that job report pre-COVID. This was our new jobs added each month. And then we had that at the beginning of COVID, like no jobs. And then all of a sudden we had way more jobs added because there were actually jobs again. And so we're getting out of this more volatile period now of Q1 and Q2 of this year. And yeah, Q3 is looking a little bit more solid. And the interest rates generally follow the 10-year bond. And you can see the 10-year bond has just shot up. So we can expect interest rates to possibly head that same direction. But like I said, there's many things affecting it. So we'll have to wait and see. So if you have any questions, please feel free to reach out. I would love to have a conversation with you. I know that I covered a lot today in a short period of time. So yeah, please let me know if you have any questions. I would be happy to answer them. And thank you so much for joining me for this week's South King County Real Estate Update. I will be back here at next Friday at 3 p.m. With your most current news at that time. Thank you so much for joining me. Have a great week.